Good morning, everyone, and welcome to Market Fatafat right here on ET Now. The markets are looking a little bit quiet, but it's the broader end that's continuing to flex its muscles. The currency continues to remain a big worry, and you have big drags in the form of all the oil marketing companies. But after concluding a monumental deal of $2 billion with Adani Transmission, Reliance Infrastructure has knocked off about two-thirds of their gross debt in one stroke. Let's hear it from Lalit Jalan of Reliance Infrastructure, chatting with my colleague Ajay Sharma.
The strategic transformation that we embarked on for Reliance Infrastructure 3 years back has culminated yesterday with the closing of our Mumbai power business sale to Adani. Essentially, what we moved out as a strategic direction was to bring the company to an asset-light, debt-free, high-growth, high-ROE businesses. So we started off with other businesses, and then this was the biggest business that we were working on. And with the culmination of this deal, which is the transfer of our Mumbai power business, 100% sale of this business, our debt comes down by a whopping 65% through one transaction itself. So from an overall debt of 22,500 crores, will be 7,500 crores. And then that brings the current reduction in the interest liabilities. What it does is, in the infrastructure space, we become the strongest company. Today, a company with a 22,000 crore plus net worth, we are at 0.33 debt to equity. If you look at all our peers, there will be nobody less than 2, and most of them, a median will be in the range of 5 or 6 to 1. So we become very, very strong. We have the ability to grow, very strong balance sheet. Not that we want to load it up with debt anytime soon.
In fact, I remember you telling me, right, in this room itself, at that time, that you are working on a transaction which will completely wipe out a big chunk of your debt very soon, and I'm happy that you've finally done it. Let's talk about the residual businesses. Now for your company. Talk to us what all is left right now and what's the roadmap, be it your Delhi asset, be it your Goa asset. Talk to us what's the visibility there.
Thank you. Great question. See, what happens is, Reliance Infrastructure to a large extent was also known through his Mumbai power business. With the sale of this business, many people ask, what are the other businesses and what are the prospects? If you look, we have the Delhi power business, where we distribute power in 70% plus of Delhi. That business itself, which is a distribution, which is a regulated business, is 2.5 times the size of Bombay. Across turnover, across customer served, across peak demand served, across area, across most parameters. So it's a business where we have 42 lakh households. We serve 5,000 megawatt peak demand compared to only 1,800 in Mumbai. We have almost 16,000 crore of annual revenue compared to less than 8,000 in Mumbai. And we have cash EBITDA this year of almost 4,000 crores. So this is one business with another 15 years to go for license. This business is growing at double-digit growth organically every year. So this will be a kingpin business for the group. It does not require additional equity. The cash flows from the business is enough to take care of whatever is the growth needs of the company, and it will be able to return cash to the shareholders. Coming to the next big portfolio is our road portfolio. We have a completed road portfolio of 11 road assets where we have spent 12,000 crores. This is an excellent portfolio with marquee assets like Delhi-Agra, Pune-Satara. So these are excellent assets which anybody will understand. This business will have an annual turnover of almost 1,300 crores this year, and the current run rate growth is 13%. Our annuities are long-term with an average annuity between 18 and 30 years. So this is a business where the reverse cash flow has started. We have long time to spread it out, and this is growing organically on its own. In terms of additional growth to this, there are almost 200 stressed assets in the sector, and we might think of acquiring some of those. On the other side, on the EPC side, we will be very active in the road segment. Coming to the next business, we have the metro business, Bombay Metro business. This business again is an excellent urban transport business. It's fully completed. We are carrying 4.5 lakh consumers per day. This is the fastest growth for a metro anywhere in the world. It's a positive EBITDA, 150 crore EBITDA, And now with another 23 years of concession period left, we think these are good times for the company. Besides that, we have the E&C business, which will then become the flagship in that sense in the Reliance Infra standalone space. Here we have grown our order book by 9 times in the last 3 years. Last year itself, we had 9,000 crores of 23,000 crores of new orders. Our order book today is almost 27,000 crores. And we have taken marquee assets like the Bandra Bhavasova Sea Link, which is a 7,000 crore business, and all through very competitive bidding. We have our power portfolio through our holding in Reliance Power, where we own 44% of the company. Even at today's depressed market prices, the valuation itself is worth 4,500 crores. So this portfolio of assets, all of them self-sustaining, all of them double-digit growth, and we have great plans for each one of them.
Sure. So 4,000 crore from Delhi asset, 1,300 crore from the other asset, then the cash flow of most of your assets now is very comfortable. Do you feel the need to further bring down debt from 7,500 crore anytime in future, or right now you would like to keep it at these levels and service it? One. And in order of priority, from the current remaining businesses, is there anything which you would also like to knock off from the balance sheet going forward, or there's no such urgency right now?
See, today our debt is in the region of 7,500 crores. We have approved arbitration claims, approved through arbitration tribunals and in most cases through single bench of the High Court, and they are in the final stages of clearance. These itself total to 6,000 crores. We have regulatory assets for Mumbai which will flow to us for the period prior to closing, which are 5,000 crores. These two itself are 11,000 crores, and 8,000 crores are arbitration assets which are under various stages of approval. So this portfolio of 19,000 crores will itself be able to pay off the debt. So we'll work towards it, and we expect to be debt-free in the year 2019. We have no plans now to monetize any of the further businesses. These businesses will grow and in the double-digit range, each of these verticals, and we have no further plans to monetize these assets today.
So the one very interesting point which you mentioned, that you are in fact looking at stressed assets in the road side, roads sector. This is quite interesting because does it mean that that is a very big area of priority for you overall, and you aim to increase your portfolio there? And what's the game plan? What's the opportunity you see there?
No, it's not like roads is our area of focus. We are focusing on each of these businesses. So in distribution, while we grow organically, if there are other assets which are available, we'll look at them. We have roads, which is organic growth. We have E&C, which is a very big business. And then we have, of course, our nascent business, which is the defense business. So these are the portfolios where we'll be focusing on.
But with